Well, it's great today to be here with Mark Wickersham, all the way from England. Here I am in Australia, so it's great to be joined by Mark and a fellow chartered accountant, and look forward to talking a little further about this great issue of pricing for professional service firms. But Mark, if you could just give us a little background about yourself and how you came to be doing what you're doing.
Yeah, sure, Steve, and it's it's great to be on this podcast and great to share my thoughts. So thank you for inviting me. I'm a chartered accountant. I entered the profession way back in 1988, qualified after 3 years, and then in 1996 set up my own accounting firm. Started from scratch, working from a room in my house. Grew that over the first 2 years to a couple of hundred clients. Grew to in UK currency, just over 200,000 in fees. So it grew very quickly in the first couple of years, but also made so many stupid mistakes in those first 2 years, doing what I thought was the right thing to do because it was the way that I was brought up in the profession. And probably the biggest mistake that I made was in the area of pricing, partly being way too cheap, and partly thinking that you had to keep timesheets. So I was fixated upon measuring time. So my start of my own business wasn't particularly fantastic, other than it grew very quickly. But then I was fortunate to meet someone called Steve Pipe, who I now work with, and he started to change the way I thought about business. And then he introduced me to Michael Gerber and Ron Baker and Paul Dunn, and in 2000, I then started, as well as changing the results of my practice by changing the way I did things, changing the way I priced, I also started working with firms of accountants and then sold my own accounting firm back in 2006, sold it in a management buyout, sold it to the client managers. And for the last 13 years now, I've been working with accountants, helping them in a whole range of areas, but particularly pricing. Pricing is the thing that's fascinated me the most because when I learned back in the late 90s how to price properly, it completely transformed the results I got from my accounting firm. Made a huge difference, huge impact on my profits, huge impact on cash flow, huge impact on my life. And so that's really what I've been teaching accountants for the last 13 years.
Excellent. So you said you qualified way back in 1988. I qualified way back in 1989. So I think we're of a similar genre. I started my firm in 1995, sold it in 2005. So we actually got a very similar background there, Mark. So,
yeah.
So what you met some of those? I mean, you mentioned you met Ron Baker, Paul Dunn, Steve Pipe. Ron and Paul have particularly been a huge influence in my career as well. I went to one of Paul and Rick's boot camps here in Australia in the mid-90s, so constantly keep in contact with Paul and have done a lot of work with Ron over the years. So, but what brought you? Was it Steve and Paul and Ron to the pricing, or were there other influences as well to this value pricing conversation?
I think that it's difficult to know where it started, what started off, but something I must have heard back in about 1998 made me think. In fact, I remember it was when I first met Steve and he introduced me to Michael Gerber and the systems mesh and thinking about how we should systemize our firms. I'd been kind of wrestling with the idea of how could you systemize the way that you price, have a systematic way, because in my accounting firm, at that stage, two and a half years into it, I had a couple of client managers who also went out to see prospects and clients, and they'd give quotes price on a completely different basis to me, and I was thinking, this is crazy. We need to find some way of being much more systematic. And so I'd been wrestling with that idea. How do you give fixed prices? How do you come up with a systematic way of pricing for something as, for example, accounts compliance work? There are so many variables there. For example, the quality of the books and records, how big the firm is, what other services they want. How do you find a way of doing that? And it was then when I came across people like Paul Dunn and Ron Baker, the light bulb started to go on. I thought, crikey, yes, there is a way of doing this. Forget the time element and think about value and what makes up value. So really it was a mixture of different external influences plus the way I was thinking that kind of got me on this road to thinking differently about the way that you can price in an accounting firm.
So now, and as you said, for the last number of years, you're working with accountants and also in conjunction there with Steve Pipe. So what do you see, particularly coming from the UK perspective, as some of the challenges? Obviously, we're talking about pricing, but what are some of the challenges that you see facing the accounting profession and in the last few years you've worked with, and what you see into the future?
Oh, well, that's an interesting question, Chat. There's a huge number of challenges because we're in a time of so much change, change with the way that we market our firms thanks to social media. So marketing has completely changed over the last few years. The traditional way of marketing an accounting firm, I believe, is pretty much dead, and we need to change the way we do that. We also need to get to grips with technology with things like cloud-based accounting. And so one of the things I'm seeing is a kind of a new breed of accountant coming through, a younger breed. And it was interesting, I was talking to Paul Dunn the other day, and really one of the big issues I think facing the profession in the UK, and probably this is global as well, is that a lot of these younger accountants coming through is why on earth would they buy into a partnership and end up saddled with huge amounts of debt into a traditional firm when they can do things much easier themselves, and thanks to the global economy, thanks to the internet, thanks to social media, you don't need to necessarily employ people either. You can build up a firm with a network of people using outsourcing, for example. So I think the profession is going through a huge change. I think also rooting back to pricing, there's a huge challenge there, in as much as accountants are not very good at pricing. One of the things that I found from all of my benchmarking studies over the last 6 or 7 years is that accountants generally, and I'm talking 90+%, are way too cheap. They're charging far too little. And it's because they don't know how to charge. It's because they make this assumption that all their clients are price sensitive, an assumption that's completely wrong, but they assume clients are price sensitive. We've just gone through a particularly bad recession, the worst recession in living memory, and that's kind of reinforcing their mind that clients are price sensitive, they're struggling, and therefore we need to keep our prices down. And that's the root cause of so many problems in the accounting profession, that if we don't charge enough, we don't make enough margins, we don't make enough profit, and therefore we can't afford the time to recruit the right quality people, to develop the people. We can't afford the time to develop our systems, develop our strategy. We spend all our time firefighting and trying to grab as many fees as possible because we're desperate for work. And the whole root cause is the fact that we don't know how to price. But at the end of the day, it's not our fault as accountants, because we're not taught how to price. It's something that I think there's kind of an assumption that accountants make, is that the way you price is based around time and it's all around costs. But Ron Baker said for years and years it's got nothing to do with costs. And what we need to do as a profession is learn how to price, learn the secrets to pricing. Because if we can get that right, if we can get the right price, then everything else becomes so much easier, because we can start making the margins, the profits, and having the time and the cash, the resources to properly invest in our accounting firms.
So, other than I'm going to totally agree 100% with everything you've just said, but I see that connected in there, and obviously Ron talks a lot about it as well, but we all do in this space, is that connection to value. And I think that so many accountants, not just accountants, other professions as well, but just struggle with understanding the value of what they do and then communicating that value in any meaningful manner that can connect to the customer.
Yeah.
So your thoughts on that value side of the equation?
Yeah, no, it's interesting. It's something that what I'm finding from research that I've carried out over in the UK through benchmark studies and questions is that over the last 10 or so years, there's been a sea change in the profession, as much as now most accountants are starting to recognise that the way forward is value pricing. However, they don't know how to do it, and so they still carry on doing things the old way. And there's a lot of misconceptions. There's been over the last 5 or 6 years, I've noticed a big shift towards firms giving fixed fees in advance, and that's a good thing. For example, over in the UK back in 2005, Sage did a major research study of business owners, and one of the key findings that came out of the Sage research was that the thing that business owners hate more than anything else about their accountants is surprise bills. And yet that's what we've inflicted on our clients for years and years and years, thanks to time-based billing. And so many accountants have woken up to the idea that we can't give clients surprise bills because they hate it. We have to give them a fixed price up front. However, the big misconception that I've seen from talking to accountants over the last 10 or so years is that accountants seem to think that shifting to fixed prices means that they've moved to value pricing. And the two things aren't necessarily the same thing. And there's a huge misconception there. And what I mean by that is that just because you're giving a price up front that's fixed, it doesn't mean necessarily that that fixed price has got any relationship with the value at all. And what most accountants, the mistake they make is they're still rooted back in time. So an example would be, an example I use a lot is something that we do quite a lot in the UK is helping unincorporated businesses, sole traders, partnerships to become limited companies where there's perhaps, for example, tax advantages. And so in that particular area with doing incorporations, what I've found is that the average fees in the UK, the typical fees in the UK for doing that sort of work, for helping a client incorporate, range between £250 and £450. And yet firms I work with and have taught them a different way of doing things are charging 4 figures, 5 figures, and in one case a 6-figure sum for something the vast majority are charging a few £100s. And it's those firms that are charging £300-400, whilst it might be a fixed price, it's got no relation to the value, because what they're doing, they're thinking, well, in the old days when I used to keep timesheets, it would take me 2-3 hours to fill the forms and whatever, so multiply that by £100, my hourly rate or whatever, and there's a fixed price. That's still not value pricing.
Yeah, I had a conversation only yesterday with a person, not an accountant, but still in the knowledge industries, who exactly the same, had moved to fixed price, but had no way connected it to value. All their fixed price was a representation of expected time multiplied by an hourly rate. So I agree. The other thing that we're seeing in Australia, and I'm not sure whether you're seeing it in the UK, is we're starting to see a lot of menu pricing, which is equally just has got no connection to value either, and it's certainly got no connection to specific customers. And then they're publishing those menu of prices on their websites in some cases, which has some potential issues that other firms will just put a cheaper price on the same menu of services. But I'm not sure whether you're seeing that same crazy behaviour happening in the UK as we are here.
Yeah, not to a huge amount, but it is starting to happen. People putting their price lists on the website, and in fact, it was only about a couple of months ago I was asked a question by one of my students of my pricing course, asking me, should I put my price on my website? And I thought that was an interesting question, so I answered that by way of a video, which is on my YouTube channel, so anyone can go and check that out. But in a nutshell, my view on that is that we certainly shouldn't put our prices on our website unless we want to pursue a strategy of being a cheap accountant and encouraging our clients to shop around for the cheapest price, which I would argue we certainly don't want to do. So publishing prices on a website, I think, is a fatal thing to do. The idea you mentioned about menu pricing, I talk about menu pricing a lot, but in a different context. Menu pricing can be very, very powerful, but where it's used as a tool to tap into the power of price differentiation and as part of your value pricing structure. So it may be that what you're referring to as menu pricing is slightly different to what I think of, but certainly the idea of publishing your price list somewhere, I think is a very a bad thing to do. And so
if I may just, sorry, Mark, I'd just delve into that, what you see please. And talk about in menu pricing, because I'd like to explore that.
Yeah. Okay. Well, let me come back to that in a second then, because I think you asked the question a little earlier about value pricing, how firms can start value pricing, and I was talking about the fact there's this misconception that simply giving a fixed price up front isn't value pricing. And one of the things that I teach accountants is the fact there's 3 steps you have to go through to be effective at value pricing. The first of those steps is, if we want to be effective and get better prices, the first thing we have to do is add more value in the first place. So the first thing to do whenever you're looking at pricing something, any particular service, whether it's a tax return, whether it's accounts preparation, whether it's incorporation work or whatever, the first thing to do is think about, how can I make what I do even more valuable? And there's really two things to think about here. There's the obvious thing that people think about is the tangible stuff. How can I add more stuff that's tangible? In other words, what more could I do as part of, say, annual accounts? It could mean, for example, producing a benchmarking report as an extra as part of the accounts. It could be doing some graphs and charts and so on. But it's not just the tangible stuff, it's also the intangible, the way that a service is delivered. For example, one simple example is simply promising to do the accounts within 30 days rather than traditionally 2-3 months. That makes the whole service more valuable, the way that you deliver it. So there's these 2 aspects that we have to think about with every job. How can we make it more valuable? And how can we make it more valuable by doing more stuff? And how can we make it more valuable by making the whole wrapper around it, the service element, much, much better? So that's the first of the 3 steps to value pricing, adding more value. The second step we have to then go through is, once we've then made what we do more valuable, we've then got to make sure that we educate the client, communicate the value of what we do. And of the 3 steps, that's the one that accountants fall down on the most, because they don't know how to communicate. And this is where communication skills come in. It's not something we're taught as a profession, but communication is critically important. And sometimes the words that you can use, the language you use, can completely transform the result when you're explaining to a client what it is that you do. One of the things I talk about quite a bit is a concept called don't wrap your Christmas presents in one box. And when I'm doing events, I asked accountants, well, why wouldn't you think of all your loved ones, and as we record this, Christmas is coming up, so think about your loved ones, and would you dream of buying all the presents, putting them in one box, wrapping that one box up and putting it under the tree? And the answer is, of course you wouldn't, that's stupid. And when I ask the audience, well, why? Well, the answer I always get back is the obvious one, which is, if you put all of your Christmas presents in one box and wrap that one box, then looking at the tree, it doesn't look as though there's as much value as lots of individually wrapped things. And yet the total value in the reality is the same. It's the same set of stuff. It's the same presents, the same gifts, but the perception of value is much, much greater when they're individually wrapped. Now, the question is, how can you take that idea, that concept, and apply it to what we do? And as a profession, we make that mistake all of the time. So if, for example, we take a set of annual accounts, if a client drops off their books and records, and in the UK that would be perhaps a carrier bag with some invoices, a file perhaps of purchased invoices, perhaps a USB stick with the records on computerized perhaps, and a few ledgers and so on. They drop all that stuff off, that box or bag of stuff, and then a month, 2-3 months later, they come in for the final review meeting, and they get given a set of accounts which amounts to a few sheets of paper, 5 or 6 sheets of paper, and a bill for £2,000. And it's not a surprise that the client says, £2,000 for a few sheets of paper, that's a bit expensive. And it's because we have made the mistake of not explaining what it is that we do. And if we think about what we do as accountants, we know what we do is valuable, it's just that we've never communicated that. So, for example, taking that set of accounts, when you think about all the things that we do, so, for example, we would do VAT control accounts, we would reconcile the VAT to the returns that have been submitted. Now, we do that. We do sales ledger control accounts. We do purchase ledger control accounts. We reconcile everything in the accounts. But if you take each of those things and ask yourself the question, so why do we do that and what's the value to the client? So, for example, with value-added tax in the UK, the benefits would be to make sure, A, that the client has claimed every bit of input VAT they're entitled to, B, that they've not overpaid any output tax, and C, that they've done it correctly so they can sleep at night knowing there won't be fines and penalties because they've made a mistake. So you've got three big benefits there just in that small little component of doing a set of accounts. So what I try and get across to accountants is that if we can think about the benefit from the client's point of view of everything we do, and just like the Christmas presents, take each of those things and wrap it separately. So explain and create a document that sets out what we do as part of doing the VAT reconciliations. What do we do as part of the sales ledger reconciliations? What do we do as part of the tax planning review, for example? So we think about all the components that make up an annual set of accounts, all the tasks that we do, and wrap them separately as a separate product almost, explain the benefits of each one. And then suddenly the client can start to say, crikey, I get a lot of stuff for my £2,000, not just 5 or 6 sheets of paper stapled together, but they do all of this for me. But as accountants, we don't tell them that stuff. And so we're opening ourselves up to clients saying, that's a bit expensive, just because we haven't learned how to communicate value. So that's the second step. And then the third step is, once we've added much more value, once we've explained that better, we've then got to find a way of linking the value and the price. And sometimes that's very easy. Sometimes, for example, with tax planning, we can make an assumption that the tax savings is the value, and therefore increasingly in the UK, for example, with tax planning work, we're finding that firms are charging a percentage of the tax savings, typically 25% of the tax savings. But we should apply a similar concept to everything we do, and therefore we need to find a way of putting some sort of value on what we're doing, and sometimes that will be something that's very objective, where, for example, it's tax planning, where there's a number at stake, an amount of money we can save. Sometimes it's very subjective, for example, the value of a set of accounts. Nevertheless, we need to make sure that we can find a way of putting a value on that, so that we can then link the price to the value. In other words, the more value we add, quite rightly, the price should therefore be higher. So they were my thoughts on, they're the three steps as I see them for being effective at value pricing. Where menu pricing fits in, going back to then your question, is menu pricing is a powerful technique for tapping into the fact that different people will pay different prices. And therefore, one way of doing that is to create a series of options. And research shows that there's a power of three, having three options. Sometimes that's called bronze, silver, gold. Sometimes I prefer 3-star, 4-star, 5-star. But each of those options wants to be not just a fixed price, but a value-based price. So let me give you an example. Going back to, I mentioned earlier about in the UK, a lot of accountants do company formation work, and most accountants charge between £250 and £450. I teach a process, and it involves a system and a piece of software for giving prices for doing that sort of work. And most people get fees in way over £1,000, and very often £10,000, £20,000, £30,000 fees. And what the process involves is all the things that I've talked about: adding more value, communicating that value, and then linking the price to the value. So in that particular case, the software calculates a price, and the price depends partly on the tax savings. The bigger the tax savings, the bigger the price. What it also does as well, though, it also builds in menu pricing, because it presents the client with three options, three different bundles or three different packages of solution. And so the clients who are least price sensitive, who want the most value, very often go for the biggest bundle of stuff. And those that perhaps are a little bit more, perhaps have less cash available, can go for the lower one. Nevertheless, all three bundles are still priced based on value pricing. The bundles depend upon the overall value of the solution. I don't know if that helps to answer that question.
Yeah, no, definitely, and I totally agree. And I talk a lot about the use of options as well, but as you said, very key that it has to be. Each of those options have to be priced still in accordance with the value. The menu pricing situation I was referring to here in Australia that's happening is that we're seeing some firms do, so you use company formation as an example. They might put, set up of a new business, $1,000 Australian. Self-managed super funds, a particular vehicle here in Australia, set up of that $2,000, etc. And there's a menu of all these often very compliance orientated services that they put together, and it's like a, the McDonald's menu or whatever, and it's, you can have a number 1 and a number 12 and a number 17 or whatever, and that's your package. And often it's particularly compliance orientated. It's got absolutely no connection to the value. And the thing that Tim Williams, I'm not sure if you're familiar with Tim's work, but Tim actually expressed it the best to me in a conversation, that the problem with that sort of menu pricing that often can happen for the professions is that they then merge the magic and the logic work. So the logic being the pure analytical compliance, the magic being what's really the valuable part. But of course they lose then the magic, and they'll lose the value. And we're starting to see quite a bit of that sort of menu list pricing happening, particularly in the accounting, also law, but and it's just it's losing all context with the value, losing all context with, as you talked about there, about the differentiation that's applicable to different sort of clients in different positions. So just no connection to value, and I see that it's setting itself up for absolute price competition and nothing else.
Sure. Yeah.
So that was a great summary, though, of that your conversation about value, and I think that's one of the big challenges for accountants. I think one of the issues, and I know I was watching a video earlier before we started recording, and one of you talked about one of the issues that accountants face is a lack of confidence. And I think it's a huge issue. It's maybe not one that we always want to admit to, but as professionals that we're in our business and whatever, but we often wear the worst prices, and it's that confidence element. I'll just get your thoughts on that one.
Yeah, that's interesting to bring that up, because I think that a lack of confidence is probably the biggest problem that we have as accountants. It's we don't have the confidence. And I think there's a number of issues here. I think that firstly we have to change our mindset, and what I mean by that is that because we're professionals, we absolutely hate it when we present a price and the client says, "Oh dear, that's a bit expensive." And it's a reaction we hate so much. We don't know how to deal with it, and so we try to avoid it as much as possible by keeping our prices lower, and that's fatal. And what we need to recognise is that if 20 or 33% of our clients are saying, "Oh, that's a bit expensive," then actually it's telling us that we're starting to push the boundary and we're on the right track, and therefore our mindset should shift. And it should be welcoming that reaction, because if we're not getting that reaction at all, it's telling us we're way too cheap and we can't afford to be in that position. And I think the other aspect of confidence, as well as changing our mindset and welcoming that, is also confidence, or lack of confidence, really stems from a lack of the skills. When we don't know how to price, we therefore don't have the confidence. And so we tend to we end up charging way too little. Once we understand how to price, once we understand the psychology and how to communicate with people, and we have those skills under our belt, then suddenly our confidence goes up. We feel better. We feel more confident about ourselves, and we can go with higher prices. And more often than not, we win those higher prices when we use the right systems, tools, and techniques.
Excellent. No, I think confidence is a huge issue that all professions face. So, mindful of the time that we've spent now, and there's that reference to time again. But Mark, could you tell us, just if people who want to find out more about what you've written about and what you do, where to find you and how best to connect with you?
Yeah, sure, Steve. Well, back in 2011, I wrote Effective Pricing for Accountants, and that was published in May 2011, and it hit the #1 bestseller slot on Amazon when it was published. People can get hold of that just on Amazon, so that's easy to get hold of, and it's a good introduction to the sort of things that I do. So if you want to grab that book, it's Effective Pricing for Accountants. It was really because of my fascination in pricing. It was it's really the starting point of a training program I created 2 years ago. It's a 12-month step-by-step program consisting of webinars, videos, and over 60 pricing resources. And that's really what I've been working on for the last couple of years. And it's interesting, I got a great success story the other day. A firm contacted me, sent me an email thanking me, and in the email he gave me some numbers, and I was absolutely staggered. So I picked up the phone and asked him if I could do an interview with him. The interview's on my YouTube channel, so people can check it out. Here's a guy in South Wales, which is not a particularly affluent area of the UK, a sole practitioner turning over £250,000, worked through the programme, put his price up by 28%, and also won a couple of really big jobs where he earned just over £30,000. He would have charged in the past £6,000. And at the end of the interview, he told me how going through this process had increased his gross recurring fees, his sales and his accounts from 250 to he's on track to do 400,000, which is a remarkable increase just by changing one thing, changing the way he prices.
Right.
So if people want to contact me, I think the best thing to do is I'm very active on LinkedIn. So look for me on LinkedIn. My name's fairly easy to find, Mark Wickersham. So if you go into LinkedIn, go find a search. I'll happily connect with any accountants who want to connect with me. So just connect. And when you do connect on LinkedIn with me, what I'll then do is I'll send a message via LinkedIn with some links to some free things that I've done for accountants. So I've also created a book called Practical Pricing for Accountants, which I give away for free, and I'll send you the link to that so you can grab that. And as I've mentioned a few times, I do YouTube videos very often, so go and check out my YouTube channel, go and watch some of the videos, and if you like what you see, then please feel free to contact me.
Well, thanks for joining us, Mark, and for everybody else. The links to various Mark's work and his book that I strongly recommend, the YouTube channel, etc., will be where this podcast is listed. So please have a look and follow what Mark's talking about. We're very much on the same page about wanting accountants to be able to learn how to price better and, as a result, have a much better practice. So thank you again for joining us, Mark.
Thank you so much, Steve. Bye for now.